It's March 24, 2014, current time 10:42 GMT. Jay Misley here with a daily Forex trading outlook. We'll start out by looking at what today has been a data whipsaw, and I'll tell you why I'm focusing on data. If you look here, we popped up to around 138.25 on the better French flash PMI, came back to about 138. We hung around there, and we dropped another 30 to 40 pips on a slightly weaker German flash PMI and an inline Eurozone flash PMI. The reason I point this out is market, first of all, is probably a little bit long, waiting, expecting a slightly better German number, so it sold off, but it shows the hypersensitivity to data. And one reason I'm mentioning that is that a key number coming out a week from Friday will be March U.S. non-farm payroll. And I saw a forecast last week, I believe it was from Deutsche Bank, who upped its forecast for non-farm payroll to 275K from 225K. Now, granted, this is a snapback from the winter weather, but with the market on an interest rate alert after Yellen's comments last week, we will. You got to watch non-farm payroll, and if forecasts start coming in on those high numbers of 250K or above, it's going to support the dollar into non-farm payroll. When that happens, it depends on when the focus shifts to non-farm payroll. We'll have to get through month end a week from today, but once that focus shifts, to U.S. jobs, it'll at least suggest a limit on the dollar downside ahead of that number. Otherwise, if you look at a daily chart in the euro dollar in a day where there's no U.S. data coming out, so I guess we focus on stocks and bonds. This is interesting. This is an uptrend line on the daily chart that was broken last week, and it's currently acting as resistance. So keep that in mind on any blip up above 138. It has to break it back above this to negate, which is any risk on the downside. On the downside, key level is 137.48, which is just 137.50 is key, as it protects a level I've been pointing out, 137.05, which is the risk. Also, the comes in around the 50-day moving average and the 100-day moving average below that. So you watch 137.50ish, 48 or so, as that's going to determine whether we go to 137.05 or the focus stays on 138, where it's been for the last 3 days. Another level is on the 4-hour chart. Look here, we have the 200-period moving average, which has been acting as a supportive level. Even a pause above it last week, comes in just above 137.50 currently. So you got to watch that. On the upside, look here, the 100-period moving average capped the upside today. So we're trading between the 100 and 200. Both still sloped up, but if we break through here, then then at least in the 4-hour chart, risk here is again 137.05. So 137.05 is a key level on the downside. Ahead of that is 137.48 to 50. On the upside, we'd have to get back above 138 to neutralize the risk, and that level is traded 3 days in a row. And how long that pattern comes on, that will determine how much pressures build for a directional move, which is tilted to the downside, but as I said, contained unless 137.50 is cracked. Otherwise, we're in a week again where data, even if it's minor data, market will be hypersensitive to it. So that's it for today. Look at the bottom of this chart here. You'll see a link to knowledge is power. It's a motto that we've been using, and you'll see some really articles worth reading today and ongoing if you click on this link right here.